Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Happy New Year.
Yes, sir. Happy New Year. This is our first show of the new year, isn't it?
It sure is. It sure
Wow.
is. And we
Wow.
got a lot to talk about. There's a lot of action happening. People got through the holidays. The holidays were all in the middle of the week and totally screwed up my day. I didn't know what day it was for
Forgot
last
what day
week.
it was several times.
It's crazy. Then we got the whole Maduro thing happening up.
Oh,
Just to
geez.
just to make it all, just put it all together in one big package.
That's right. That's right. Yep. Fun stuff, man. Fun stuff. Hey, over the holidays, you and I started working back and forth on a couple of different people. I have a sudden resurgence of interest in investing in
In
Florida.
real estate. Yep.
In
So do I.
Florida in real estate. The investing in Florida has been a little bit off. And over the last honestly, over the last couple months, but definitely over the last 2 weeks, for some reason, I'm getting a lot of people that are really interested in rentals, and they're talking about both short and long term
Right.
and trying to figure out what the difference is between the two. So I thought we should talk about that today.
Well, absolutely. So you and I are both investors. We both have rental properties.
Yep.
I don't know about you, but I've done short-term rental before a couple of times, and it's been profitable for me. However, when it came to having passive income, it no longer was passive. I actually created another job for myself. And I kept lying to my wife about how much easy it was and that it really didn't take up that much to my time. But by the time I really put the pencil to it, it took up a lot more of my time than I thought. And
Yeah.
then you got all kinds of other things that happen, and you have a different clientele on
Very.
short-term rental than you do on long-term rental. So I've had a lot of experience with long-term rental. I consider myself to be an excellent landlord. And when I
Amen.
teach people how to become a landlord, you have to be a responsible landlord. You have to take care of your tenants. I have no interest in being a slumlord. And by God, if something breaks, I'm going to do everything I can to get it fixed as fast as I possibly can to be able to maintain a quality of life. We live in
Absolutely.
Florida. We live in Florida. What happens when your air conditioner breaks down in your rental property, right? So you got to get somebody else out to fix it. Now, you and I had an interesting conversation about that. I want you to share that.
Yeah, when you're doing a long-term rental, you want to have it fixed as quickly as possible. But at the same time, people that are living in a home understand that it's going to take a day to get somebody out there and get them to fix it, right? They don't expect it to be fixed 5 minutes later, right?
Right, like a hotel room.
Like a hotel room. And that's the difference, right? So you've got in the Airbnb thought process, and I get it. I've rented plenty of Airbnbs and VRBOs and stuff. It's a service business. You are providing a service. You're not providing a place to live, right?
No.
So their expectation is going to be that it's going to be fixed immediately. And
That
of
it's
course,
not even going to break.
well, then it's not even good. You should have fixed it before it broke, right?
Right.
But when does an air conditioner always break? Friday night at 11:45. That's when they
right.
always break, right?
That's
If
right.
they don't break it Friday, they break on Saturday, which is
That's
even worse.
correct.
They never break a Tuesday at 2 o'clock when you can get somebody out there.
Going to the parks for the afternoon, so take your time. We won't even be there. Now, that doesn't
Exactly.
happen.
But you can make a lot more money in short-term rental than you can in long-term rental. So there's a lot more profit potential, but there's a lot more work.
Let's nail that down just a little bit,
Sure.
because I think you're right in one sense, but sticking with that one concept, your tenant that had an air conditioner breakdown while they're on vacation, what are they going to do to your website now that they look at? They're going to blame you, even though it was no fault of yours whatsoever. You couldn't have anticipated happening. They're going to give you a very poor review. So that's the first negative thing that happens to it, right?
It does.
Then that affects future bookings, I would imagine.
It absolutely does. It definitely hurts your future bookings. Now, I will tell you that I have had it happen. I own a short-term rental myself, and I have had the air conditioner break with a guest in there. I've had some other things happen too that are not pleasant. I have found that if you do a great job of communicating and getting it addressed, you can usually avert that bad review, right?
Right.
But it doesn't take much to go from good to horrible, By the way, if you've ever looked at any reviews, you almost never see a 4-star or a 3-star. It's either 5 or 1.
Right.
So, right. So
That's true.
people are either super happy, it's great, or horrible. But again, going back to the money, right? You can make more money on short term, but it's going to cost you more. It's either going to cost you more in time, where if you're managing it yourself, or it's going to cost you more in money, because the typical short term rental management companies take between 30 and 40% of the overall revenue.
That's a
Right.
big percentage.
Right. Whereas a long-term rental, you can get a property manager for
10%
that, and it's
all day
10%,
long.
even 8% now, right? There's
Yeah.
companies out there doing it for less. But so it's a little less money on the top, but it's a lot less money on the take. And so your net is pretty similar. The other thing that, and I'm not anybody's tax advisor, but my understanding of the tax law is that long-term rental is considered passive income by the IRS. Short-term is active income, just like your W-2.
It's going to be taxed
You're
differently.
going to pay a higher rate if you do your taxes correctly. Now,
Interesting how that works. So it's interesting because I had a couple of short-term rentals that I was playing with, and they really produced good rent. I had already bought all the furniture. They were fully furnished homes. I got them all dolled up. They were perfect. They looked like brand new inside. So things went really well until they didn't go really well. And then when they didn't go really well, they went really bad fast. And I'm like, I'm done with this. This is too much. This became a job for me. People that are looking at the short-term rental, you want to be aware that it will take more time. You will have more, you will need to be more active when it comes to your rental, because you got to coordinate the cleaning, you got to coordinate repairing things, you have to coordinate missing items. I even had a microwave. I'm like, what happened to my microwave? Where did it go? These kind of things happen. Like, where did the coffee maker go? What do you mean? There was a brand new coffee maker in there.
Knock wood, I've never had any of that happen to me, but
Yeah.
I have been very fortunate. The guests that I've had through there, I had a guy the other day texted me right as he was leaving, "Hey man, I'm sorry, I broke a wine glass."
Yeah.
Like, hey, no worries, man. It's a wine glass. I'll take care of it.
Yeah.
Right?
No problem.
So
That's a great
I haven't
channel.
had any big things like that happen, but I'm sure it will. By the way, there's another thing that people can do that's between short term and long term. I don't know if you've ever heard of this one, but they're called midterm rentals.
Okay. Talk
And
about
it's what
that.
I do mostly. Okay. I have a couple of apartments that I built in the back of my Airbnb, and I rent them out mostly to travel nurses,
Okay.
people that are on remote
Flight
assignments.
attendants, things like that.
That are on remote assignments for different companies. I have a couple in one of my apartments right now that's building a house. It's going to take 6 months to build it. And they're living in my 1-bedroom apartment while they wait. They're going to be there 6 months.
Right. That's
So,
perfect.
and so all their utilities are paid for, Wi-Fi, everything, just like an Airbnb. I don't quite charge them what an Airbnb would charge, but I also don't charge them what a long-term rental would
And
be,
it's
because
furnished, right? It's a furnished
furnished.
apartment. Yeah.
It's furnished. Everything's there. I actually it's an Airbnb as well, right? So you can rent it for 5 days, but they're renting it for 6 months, and so I've got that whole time blocked out. So it's another really good way. Let's talk about financing real quick, because I know there's
Sure.
ways to get these financed, and then there's ways to not do it.
Typically, if you're doing long-term financing, you've easily got the availability, if you qualify for a full doc loan, conventional, Fannie Mae, put 20% down, and you can get a conventional loan. Conventional interest rates right now are running somewhere between the mid sixes and the low sevens. Okay. Depending on how much money you put down, depending on what your credit score is. So that's very, very attractive. But when it comes to short-term rental, conventional financing can be much more difficult to get based on the amount of occupancy or renters in a particular community. All kinds of things like that can take effect that can cause conventional loans to not be so attractive, or to where they won't even qualify. So then there's alternative programs. You've got bank statement programs for self-employed people, and you have DSCRs, debt service coverage ratio loans, which are super popular. The thing I like about that is I don't need a lot of my documents. And people never think that, oh, I can get you all the documents you want, all you want, but they don't realize how intensive it is for a conventional non-owner occupied transaction. When you do a DSCR, you can still get the interest rates really close to what they would be, if not even lower than a conventional mortgage rate. Now, you usually want to put down 25 to 30%. You can do as little as 20, but the reason 25 and 30 works a little better is because you're only using the rent on the property to qualify. And the rent on the property has to be equal to or greater than the amount of the mortgage payment. And that
Right.
makes it super easy for investors. So
Yeah.
I can take an investor and get them in and out of a house and no problem. And it's so much easier than self-employed tax returns and your profit and loss statement from your business. Keep it simple. And it makes it very simple. That's what I'm doing with me. I'm doing them on my own. Many of my investors choose to go in that direction as well.
Sure. Yeah. Yeah. That's what I have on my Airbnb. I have a DSCR loan. So
Yep. And you can choose to do them with or without prepayment penalties. But right now, I see that I can get a client with good credit scores around 6.5%, maybe even lower, with a 3-year prepayment penalty. And they may go, I don't know if I want a 3-year prepayment penalty. Let's look at interest rates. Let's just say interest rates right now on owner occupied are 6%. They're really about 6.05, say 6%. Well, if a conventional loan for investor is 6.5 to 7.25, why would I want to do that and provide all that extra information when I can buy the rate down, keep the get a prepayment penalty on there, and it's locked in, but now I don't have to refinance it because I've already got a low rate. And it
right.
saves that investor time and money in the future. A lot of people
Yeah.
don't
Yeah.
realize that. It's the refinance later that can kill you.
Yeah, absolutely. And honestly, 3 years goes by pretty quick, right?
It does.
I've done a couple of seller finance deals where I got the seller to carry the note for me. And usually with those come a balloon. And my mentor always told me, if you want to see 5 years go by really fast, get a 5-year balloon on a note.
Yeah. Yeah, you're right. So true. So true. One more thing I want to talk about on this show
Yeah.
is the whole elimination of property taxes in the state of Florida, and the website that you've created and the blog that you've created on your YouTube channel. And I want to help people understand more about what are the facts on this? What exactly is going on? Is this something that's just pie in the sky that'll never happen? Are we getting closer? Because I think we're getting closer to possibly a solution. And they're still ironing out the details, but tell us a little bit about your channel on where we can go to find that.
Yeah, I'll get the link in the comments when we get this up, because it's a whole series of videos that I've put together so far and a whole series that I've got planned. There's a lot going on with the legislature. Ron DeSantis wants to do it simply and just do it no more property taxes on homestead properties only. Unfortunately, that's not what the legislature is talking about at all. And Ronnie doesn't get to dictate what happens, right? As much as everybody thinks he does, he doesn't. There's a couple of senators that are putting forward different plans that do tweaks and adjustments. One of them removes half the homeowners for homestead, but it leaves the school taxes in place. And then there's another one that's completely the opposite and nukes the entire system. Everything, homestead, non-homestead, commercial, doesn't matter, just nukes the whole thing. I don't think any of those are the right solution. I really don't. I think Ron's got the right idea, right? Homestead properties, help out homestead people that live in Florida, people that stay in Florida year round, or at least most of the year. And, let them benefit. Let the businesses still pay their property taxes. They're fine. They're used to it. It's not going to change anything if it goes away for them. They're just going to make more money, especially the out-of-state ones. You got these big companies out of state, even the mid-sized companies out of state. They don't have to pay property taxes. They're not making it up in sales taxes. They're not even here, right? So I don't like that one, but hopefully it all comes together.
Eliminated property taxes for everybody. Even these apartment complexes wouldn't be charging taxes anymore. And that's a lot of revenue that we're looking at right there.
It's $60 billion. It's a lot of money. Whereas just homestead is like 18 billion. So I think that's the smarter solution, that's we can make that up in other places and get it through. The legislative session starts January 13th. It only goes until March 13th. So there's only 2 months where they talk about this crap and make the sausage, right? We've all heard that sausage making euphemism. So we've got 2 months to convince them to do the right thing and put homestead only on the ballot. That's what we got to do.
Wonderful. Hey, thanks for this. This has been great. Lots of information. The website is posted on the bottom of this, so join us. We'd love to hear your feedback on it. If you have questions for Tom or I, feel free to text, email, courier, pigeon, whatever you want to do to get the information over to us. We'll be happy to address it. Thanks, Tom. Have a great day.
Thanks, Bruce. You too.